Welcome to Nasdaq Trade Talks, where we meet with the top thought leaders and strategists in emerging technologies, digital assets, regulatory landscape, and capital markets. I'm your host, Jill Malandrino, and joining me this afternoon, we have Russell Rhoads, Associate Clinical Professor of Finance at Indiana University, and Dan Deming, Managing Partner at KKM Financial. We're here to discuss why the expectations of volatility events are somewhat muted. It is great to see the both of you, as always. Russell, let's kick it off with you. You noticed some price action last night between the S&P and VIX, and something within the term structure suggested that this volatility we saw the night before perhaps may not follow through at such a scale today.
King is very easy. Where
Yep, you're good.
I'm good. Okay, I thought I saw a mute thing. All right. So, other than technical difficulties and not being able to get myself together here audio-wise, last night when I was a little more coherent, I was paying attention to the first hour or two of the futures, and we do have VIX futures pricing at that time. The S&P was down over 100 points, and at the same time, the February and March VIX futures had moved up to a 19 handle or so, but the February contract was in line or at a slight discount relative to the March contract. And typically when they're overdoing it on the downside and the VIX is really being a fear index and the VIX futures are indicating fear, you'll see the front month at a premium to the second month. And we didn't hit that last night. And, thinking it through, that might have been a really good indication that the S&P was not going to follow through and we weren't going to come in this morning down 200 points as opposed to 100 points.
Yeah, Dan, when you think about it from the fundamental perspective, as the headlines are coming fast and furious, and we're trying to get our heads wrapped around how tariffs and policy, what the execution will look like. From the corporate perspective, you can't just flip a switch and create a whole new strategy as it relates to long-term manufacturing and import-export plans. It just doesn't happen overnight like that. And then who's to say that the execution doesn't reverse in the next day,
right,
week or two? And you're seeing that reflective in the VIX futures markets, as Russell had suggested.
Yeah, I agree, Jill. I mean, there's still a great deal of uncertainty, and that's why you are seeing the reaction in the markets. But nonetheless, the overriding theme is, how long is this going to be in place? How evasive are they going to be? And then also what that could be turned off in the next day, the next week. I guess the longer it draws out, then I think you're going to see demand for probably out of the money VIX calls continue to increase. You'll see vol start to expand if these sanctions are in place for an extended period of time without any kind of negotiations going on, or if it looks like they're even going to go further. So that's the outlier right now. But basically, I think this is just kind of floating the balloon. Hopefully things will calm down and things will get back to some kind of semblance of getting things organized as far as kind of understanding what the means of these tariffs really are. And then also hopefully some negotiations take place and we see the markets really not impacted too significantly if these are only in place for a short period of time.
Yeah, Dan, I think you bring up a good point, because you don't want it to become a situation of the little boy that cried wolf, where you kind of throw things out there to see what sticks. And then when there really, is a policy change, or there's something that does require the market's attention, the economy's attention, and it might not be given, the level of credence that might be deserved, you want to be careful of that scenario as well, because things are moving really fast here since
Absolutely. I mean, look at December when, the idea of tariffs and things were floated, we did see quite a reaction at that point. And then now that the markets had a chance to digest that, the market anticipated that this possibility existed. It was really the 10% on China that was the unannounced part of the puzzle last Friday that caused this kind of rollover. So that caught the market off guard, so again, the market had priced in certain aspects of it, but not all. But as Russell pointed out, if you look at the price action and the futures, that was very telling, given the fact that we didn't see the front month future really explode higher and basically see backwardation in the futures market, meaning that front month futures higher than the rest of the term structure. Really didn't happen. And now we're seeing a pretty normalized VIX futures curve, as well as the front 2 month futures trading below the cash, even at these levels around 18, which from a historical standpoint is actually pretty low. So at least short term, the market's digesting this. It seems like it's getting back, to some buying pressure here as we move through the session. And we're seeing, again, the futures in the VIX indicating that the expectations are that we're going to continue to see the markets hold these levels.
Right. Russell, anything that you're seeing like in the vol products?
So I tend to focus on U.S. volatility, but also European volatility. And sometimes there's a disconnect between the two. And we do have a VIX, and we've got a VIX based on options on the V stocks. There was about a 25-point difference between the two of them last week, with VIX options being a lot more expensive than V stocks options. Also, I was on a volatility program when the announcement came out. And just before the announcement came out, spot VIX was right at 15. And the front month future was up at 1650. We haven't seen premiums like that in some time. So I think it's kind of like a love fest here, because I'm going to confirm what Dan just said. The market was, you could see in the market pricing that the market was anticipating it. And then it's anticipating something, not sure what, but it looks like some people were prepared to take the other side of it as well. Typically, the big trades that we see in the NDX options tend to be the same day expiration. There were a lot of late day Friday bull put spreads. Where I think somebody was selling the 20,500 puts and buying slightly farther out of the money puts, and that was far out of the money. VXM was up over 20, so options were kind of expensive, and that trade really did not get tested today. So if you go back and look, pros expected it, and you don't make a trade idea like that on a Friday unless you were a little bit prepared in advance, and I think some people were prepared in advance for this.
Yeah, Russell, I wonder if it's the nuance of the Nasdaq 100 and the heavy-weighted components that had such exposure to the DeepSeek news and so forth. So perhaps what we're seeing in the Nasdaq 100 is a little bit more nuanced than the broader market, if you will.
Yeah, and it had also been underperforming already. In fact, right now the Nasdaq's down about 80 basis points. The S&P's down about 60 basis points. Typically, on news like this, that you would expect to have a bigger impact on potential technology stocks, especially with the China component of it. You would expect the Nasdaq to be down at least twice as much as the S&P 500. But I think the DeepSeek stuff from early last week had already put a bit of a cap on the Nasdaq 100, and so the follow through wasn't quite as dramatic. Plus, as you mentioned, it's a lot of regular industrial type companies that are going to get impacted by the Mexico and Canada stuff.
Yeah. Well, Dan, it's so interesting. With Trump 1.0, really the market didn't really do much of anything until December 2018, when we saw that 20%-ish move when the China tariffs were announced. So I wonder if the market kind of already knows what this playbook looks like to a certain extent.
Possibly. And I think that the anticipation is that there is going to be a resolution, because it really doesn't benefit anybody. But the idea is hopefully to try to at least level the playing field to some degree. And so I think as this continues to unfold, it's really about the duration right now. Then that's what is unknown. So I think that that's really the concern here when you look at the pricing structure. Now, the one thing about the futures, as Russell pointed out, we're seeing a pretty normal kind of environment there, nothing outside of what you'd expect on a big move on a Sunday night. But I can tell you that when you look at the demand for options in February in the VIX, and particularly March now, we're seeing big open interest in the March 20s, 25, and 30 lines. So you are seeing still significant demand for way out of the money calls, for the possibility that we could see further volatility in the next couple of months if these things don't get resolved.
Yeah. I mean, Russell, even look at the reversal that we saw, with a tariff this morning and extending Mexico by a month. I mean, it's not even within a 24-hour news cycle.
Yeah. And in fact, I think initially there was a lot of confusion around the announcement, and the belief was that the tariffs were going to be implemented February 1st, which was Saturday.
Yeah.
And it's on now it's on Tuesday, but also as far as the timing goes, etc. China's closed, man. This is Lunar New Year.
Yeah, you're right.
So and I don't know if it was a strategic idea to throw that out there when the other side of it was on vacation or not. So I feel like that's one thing that's going to be hanging over our heads for a little while, because maybe Mexico and Canada get delayed, resolved, etc. But I doubt that the China part will. Yeah. At least not for the near term. I'm not, just because of the holiday.
Right. Well, I mean, Dan, to wrap up here, it is interesting. I believe, at least since I've been involved in the markets for quite a number of decades. With the inauguration on January 20th, I believe that was one of the only times, or the only time in recent history, where we started to see some of these policy actions really take place, and the markets were closed that Monday.
Yeah. Right. I agree. Yeah. So, I mean, the speed of the initiation of the policies. Now, some of it was a little bit telegraphed, but you're right. And, again, as we continue to see these policies unfold, it's keeping the market on edge. But at this point, even with the unexpected tariff on China that was announced on Friday, and to Russell's point, I think it's a great point that, how long is it going to take China to kind of even think about responding? And once they do, what will that look like? So that's a big uncertainty. So, even though we're seeing what is considered a fairly normalized vol regime right now in the VIX futures, as well as the other markets here in the US, they are at elevated levels. So there is still some demand for volatility exposure and potential risk mitigation, just not at an escalated point right now, given the fact that we did see that violent move overnight and the markets have recovered. And again, I guess to some degree, had been priced in as far as the expectations when you look at how the VIX futures reacted to the move.
All right. And that's exactly why we keep you guys around. Appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.